To begin with, it's going to be a muted quarter for the entire IT sector. If you look at the sector as a whole, to set it up, before we go into, Infosys and TCS in particular, the revenue growth is going to be muted in the sense that it's going to be flat to negative for some of the companies. We've seen that coming in the Q2 as well. Some of the companies are facing some of the issues with respect to execution of the discretionary orders, which are hardly to come by, and if at all they're coming, the starts are getting delayed there. There's not much of currency cushion which is coming in for these companies as well, because the rupee against the dollar may have gone up, but against the euro and the and the pound, they have been weaker in that sense against the dollar there. Margin is going to be under pressure for them. They will continue to remain under pressure. There are going to be some challenges with respect to cost which is coming in there. It's supposed to be a soft quarter because furloughs is a quarter of furloughs, but what we are hearing is that the furloughs could be little longer than expected, and so the revenue recognition will be much more small, slower in that sense. Demand continues to be uncertain, and it will continue to be till the next couple of quarters, till you have some certainty on the Fed rates cuts, which the street is trying to price in, and as a result of which the BFSI is going to pick up from there, especially in the US market, which continues to be the biggest market for the IT companies. And as I said, discretionary spend is virtually absent, and if at all there's some signings happening, the starts are getting delayed because management want to push it to the second half of calendar year 2024. So from an Infosys point of view, Infosys is something is going to come in from it's going to be muted there. But before I go to Infosys, I just wanted to look at the Nifty IT, how it has performed. From a 12-month point of view, it's not a bad performance, 22% returns coming in for Nifty IT, but it has slowed down in the last 3 months. 3 months is around 6 to 7%, and for 1 month it's 4.3%, which is coming in, and that's largely led by some revival of hopes that things are going to turn around in the second half of FY25 for some of the companies, and that's getting priced in some of the prices for larger companies like an Infosys or a TCS for that matter. Samina?
With this, just Sajeet, before we go on to get some more details from our analyst, I think one big talking point in the IT industry has been poaching veterans and change of leadership, moving from one company to the other. Now with TCS, I think they were one of the lucky fews where we didn't see that, but I believe there's going to be a big leadership move in this year with their COO retiring. Is that correct? And would that be significant is all I want to understand.
It's not going to be significant, but before I come to TCS in specific, I just set it up for the Infosys, the price which is going to, the revenues that are going to be coming in, it's going to be muted revenue. There have been some setbacks for Infosys in this quarter because of one of the big clients' orders which getting cancelled, $1.5 billion. So there is going to be recalibration of TCV which is going to happen there. TCV to revenue conversions are getting slower for Indian IT companies, and Infosys is also facing the same. Though these companies are announcing good total contract values for every quarter, that's not getting converted at a faster pace so that they can book revenues, and that's where it is going to be. So dollar revenue for FY24 is going to be flat for Infosys there. The hiring is something which we need to look at from a point of view of how they look at the demand coming in there. It's going to be muted for FY25. So if someone is looking for FY25 guidance, it's not going to be just the numbers, but also the number of employees that they're going to hire in FY25. That's something which needs to be done. TCS, again, revenue in dollar constant currency terms is going to be flattish, which is there. TCV above $7.5 billion is something that to watch out for. If they are able to get that TCV, that means that they are able to book more orders, which is there. Again, TCV to revenue conversions are again slower for TCS there. US BFSI space has been good. Q2 we saw good kind of growth coming in there, but outlook for 2024 calendar year and 25 is something which needs to look out for. Healthcare and retail has been slow. We've seen that coming in commentaries from Accenture as well. where they have spoken about slowness in orders and executions coming in. UK, which is a significant market for TCS, is also going to be a bit softer in Q3 for that matter. And the margins, they have given a margin of 20 to 22 percent. We need to see how they fare in the margins, though there will be some pressure coming in there. As far as what Samina was talking about on the succession planning which is happening, I think TCS has already planned that when NG moves out after he retires, there would be others who will take his place, which is there. But this industry is seeing a lot of churn happening, especially in Bangalore. Wipro is the biggest, one of the biggest company which has been affected, because a lot of CXOs have been exiting Wipro and going to rivals in various capacities as CFOs and CEOs of other companies.
Sajeet, if I can just ask you about the big, on Infosys, especially the big knock that came, I think in news flow, was them losing out a massive deal of $1.5 billion, which they had bagged in the September quarter. So hopefully more details will be out by later this evening on what deal that was. But do you see this having a big impact?
So, what we know is that they had signed an MOU with a big client, which was for a 10-year deal, $1.5 billion. That deal hasn't gone through because they failed to sign the master agreement subsequent to the MOU being signed. We don't know the reasons why it got delayed, because or it got it's fallen through. But it's surely going to have an impact on the fact that there is going to be a recalibration of TCVs, which they have announced going forward. Also, Tamanna, while companies have been announcing TCVs, we don't know how many of the TCVs are in play at any point in time, because they every time they sign an MOU or they sign a client, they put the number out as a quarterly TCV for the street to look at. But over a period of time, what happens to that TCV, whether they've been able to increase the contractual value with the client, or they've been able to reduce it, or they have lost out, or they have exited that client, those things are very vague for the entire industry. And I think it's time that the street start asking them about the amount of TCV they have got and how much actually is an active TCV book for them.